Don't make one of these five massive mistakes if you're considering selling your home in 2026. Sellers are walking into next year with confidence, but it's the wrong kind and it is severely misplaced. They're relying on outdated beliefs, emotional pricing, and a version of the market that simply does not exist anymore. And here's the thing, it's not your fault, but there are some truths that you really need to understand if you're going to be a home seller that is successful in 2026. So far, no one is really telling you what's changing or what to do instead. But getting this wrong can cost you time, money, and massive opportunity. So in this video, I'm going to walk you through the five biggest mistakes that home sellers are going to make in 2026. And we're going to talk about how to avoid every single one. And you're going to want to stick around for all five of these because I guarantee at least one of them will catch you off guard if you're thinking of selling your home as well. Let's get into it. You only get one chance to buy or sell your next home. Let's get it right. Real quick, if you're wondering who I am, my name is Darren, team leader of the German group here in South Surrey, British Columbia, and we help people buy and sell real estate all the time, especially people we meet from this very YouTube channel. So if you are someone that is struggling to navigate the real estate market, whether that is to purchase or to sell, feel free to book a time to speak with me and my team in the link below of this video in the description. So the premise for filming this video was just after going through the bulk of 2025, this is being filmed in the fall of 2025, and just watching so many homeowners completely get it wrong. And the problem that's really happening is it's costing them. That's costing them dearly. It's costing them big. They are losing massive amounts of money every single month because they are simply burying their heads in the sand. And in today's video, I want to help that not happen to you. I want to make sure that we can put some things into perspective for you. So if you are someone that's considering selling your home, that at least you can be set up for better success, whether that's choosing to work with my real estate team or any real estate professional in the Lower Mainland of BC. Having a better understanding of these five misconceptions is going to really help you navigate the real estate market as best as possible. The first one is pricing your home like it is 2022. So why do I say 2022? Well, that was the peak of the real estate market. It was in about the spring of 2022 when the Bank of Canada raised its interest rates ever so drastically, where we were down at about 0.25% for the overnight lending rate, all the way up to 5% in a very, very short period of time. Now, obviously, this had a massive impact on the market, and the market had done an incredible run up of value over the course of 2020, about midway through, all the way to the spring of 2022. Now, there seems to be a mentality going around for people that are wanting to sell their homes in the current market situation. And that mentality is that I'm going to price my home at whatever, I think it's worth. It's really just mostly based on where they feel their home is worth, and everybody thinks their home is special. But the mentality out there is, well, if buyers like it, they can just make me an offer and I'll consider it. I want you to think about putting yourself in those shoes for a moment, and more so the buyer's shoes than the actual seller, and really get the mentality of a buyer about how they think about which homes they choose to view and why. Now I want you to think about how you feel that a buyer might respond to having a variety of homes available to look at on the market. Do they typically choose to go after the highest price home to go take a peek, or do they tend to focus on the ones that are more appropriately valued, especially when they know what is happening in the market? Many people might choose to price their home higher because they feel that that will have an impact on the final sale price. It's a fairly straightforward belief that the higher I price my home, the more room I have to negotiate, but ideally I get to negotiate higher. But think about the impact of what that has on a home as it sits on the market. So if your home is naturally priced way out of line with some of the competing homes in your area, some of the homes that the buyers are going to and actually checking out, well, there's a couple things that are going to happen. Not only is your days on market going to increase, which is proven to show that sellers that list too high will statistically get less from their homes than those that price appropriately in the first place. But not only are you increasing your days on market, you're also going to likely end up with a much worse outcome than had you have priced your home appropriately from the beginning. So why is that? Well, in market conditions where the prices are softening again and again, month over month, we don't necessarily know when that is going to stop. And I want you to imagine whatever the value of a home might be, like the pier coming out from the side of a lake or an ocean. But here's the thing, the value of your home is not the actual pier, it's a life raft that is holding on to the pier. Now, the tide is pulling on that life raft, and that is what the market is doing. And it's slowly moving that raft further and further and further from the pier or from the shore. The longer that property remains on market without actually reflecting a price that buyers are going to get excited about on the market, actually want to go view, the risk, of course, is you're drifting further and further away from actually not only getting the home sold, but you're watching your price go down, down, down the further that you drift from shore. You're simply drifting away each and every week, each and every month from the absolute best outcome at that time. This means you're going to want to price your home based on what the market will bear for it, not on what it used to be at the high water mark back in 2022. The second mistake we're going to see sellers make in 2026 is not appreciating that if they have to sell as well as buy, they're not appreciating the decline in the prices of what they would like to buy as well. And they're not really stitching these two ideas together, that the price of their home may have softened, but also what they would like to buy has softened as well. In a market where homes are really struggling to transact, all various types of properties are going to be impacted by this. Think about it. If a condominium doesn't sell, that's one less person who potentially is going to go buy that bigger townhouse. If that townhouse doesn't sell, that's one person potentially less that can go buy that detached home. If you've got a home that, let's say, has lost $100,000 of its buying power, the price has come down about $100,000. Well, what does the price come down on the home that you're interested in buying? Because it likely has moved in congruence with what you've seen on your own property. This means that all of this money that you could have had, well, it's kind of fake money that never really existed because, frankly, nobody ever was willing to give it to you. That was not the price of your home. The good news is, though, is the sellers that are serious on the market, therefore the homes that you actually want to buy, have also adjusted to the current market conditions. Really plainly said, homes tend to move in unison, so you really haven't lost out on that opportunity to buy something because both homes are being equally affected by the market conditions. In fact, move up buyers in a market condition like this actually win, because when you're spending more money, imagine a home priced at $1 million that's lost 10% of its value versus a home priced at $2 million that's lost 10% of its value. That means the home they're selling has lost roughly about $100,000, but the home that they'd like to buy has lost roughly $200,000, meaning you're actually gaining about a $100,000 advantage in buying or upgrading in a market condition like that. The third mistake we're going to see home sellers make all across the board in 2026 is hiring an amateur to help them sell their home. So, what do I mean by that? Well, I want you to imagine that you need to go see a doctor, and you know the answers to this right off the bat. Are all doctors created equal? Well, think about it. Of course they're not. Does the general practitioner get paid the same as the heart specialist, the top heart specialist in Vancouver General? Of course, the answer is no, because they are a specialist, they have different skills, and they are highly trained to produce a result specific to what they do. Many people are going to go into the Challenge 2026 market, and they're going to think that the professional that they hire to help them sell their home doesn't matter. And that is the furthest thing from the truth. We talked about earlier about slowly drifting away from market value as those prices potentially continue to soften. If you hire an amateur to sell your home, you risk letting your property sit on the market even longer than it needs to, succumbing to whatever the market conditions will hold. You're going to want someone with immense experience, someone with a strategy in getting homes sold in a difficult market. You're going to want someone who is highly skilled at negotiating favorable outcomes for their sellers, and somebody who has a very long history of keeping deals in challenging markets actually on the rails. The fourth monstrous mistake we are going to see home sellers make in 2026 is thinking that the market owes them something and that the market conditions are going to return. I'm going to be the first one to tell you, I don't know what the future is going to hold. And anybody that tells you they know what the future holds is simply lying to you. I mean, I want you to even think about economists here for a moment. Economists are really just making guesses based on what they see as other indicators going on in the economy. But the point is nobody really knows what's going to happen. But for those home sellers going into 2026, they're waiting on their plans, or maybe they're in a must move situation and they're thinking the market is going to change or the market owes them something. Well, I want to give you something to think about. What if that fails to be true? What if the market doesn't change? We don't know where normal might be. The market has been so topsy turvy in the lower mainland really since 2015 that normal could be absolutely anywhere. And when I say normal, I mean real estate prices. So I want to put this in perspective a little bit for you just to help bring this point home. Think of the peak of the market back in about 2022 and what the conditions were at that time that led to some of the sky high prices we saw across the lower mainland. You had emergency level interest rates right across Canada at 0.25%. Those emergency interest rates were put in to stimulate the economy to get people to spend money because when you buy homes, you spend auxiliary money on other things. The government needed people to spend money so the economy wouldn't fail. People were pandemic buying. They needed more space. They thought the world was shutting down and they saw all this great opportunity and really cheap money to go buy. So naturally, when money becomes cheaper, people will go buy real estate. That's just what happens. You also had record levels of immigration, people coming into not only the province of British Columbia, but also into Canada generally. To put that in a perspective of how aggressive the immigration was at that time, in the year 2020, there was 34,000 immigrants welcomed into British Columbia. Just 1 year later in 2021, that number went from 34,000 to 83,000 in 2021. That's a crazy number. It over doubled in just 1 year. Now, this sounds like the perfect conditions to have a real estate market spike completely out of control. If you're thinking the market's going to return, let's look at the conditions that we are in today. So number one, let's go back to mortgage rates for a moment. I'm going to explain what a neutral mortgage rate is or a neutral overnight lending rate, the Bank of Canada, and what they are hoping to achieve with the neutral rate. If you're someone that thinks the mortgage rates are high right now, they're not. My good friend Google Gemini tells me that the Bank of Canada's neutral rate is considered anywhere between 2.25% to 3.25% of the overnight lending rate. And currently, as of the day of filming this video, and we've got a rate cut coming in about a week or so, but right now the rates are at 2.75%, right in the middle of that neutral territory. So why is neutral territory important? Because the government is neither trying to stimulate the economy, nor are they actually trying to slow it down. That's where that neutral territory becomes important. Now, if you think rates are completely out of whack and super high and you're comparing them to old COVID times, well, that would simply just be incorrect. In fact, the average mortgage rate in Canada over the last 20 years, at least for the overnight lending rate, was 3.75 to 4%. So our current rates as of today are in fact lower than what they've been over the course of 20 years on average. Add on top of this that we have got a monstrous amount of mortgage renewals that are due to come in 2026. It's estimated that 60% of those mortgage renewals are going to see an increase, and that increase is looking like it'll be about 20% of what they were paying previously. This is going to be some fairly significant shock to those people paying those mortgages who may decide to put their homes on the market, adding to inventory. Now, when I say adding to inventory, I also want to recognize that we have the most amount of inventory on the market available as at least as the day of filming this video that we have had in about 30 years. The point of all of this is sitting there and hoping for the market to change, or that saying that the market will come back, the market owes me something because I could have, should have maybe sold at a high watermark at some point, is simply just using hope as a strategy. If you think the market will return, my question to you is, what if it doesn't? Or maybe it will, but how long are you prepared to wait for that to happen? 1 year, 2 years, 5 years, 10 years? There's absolutely no guarantee that the market will return, if at all. And this leads us into our fifth and final, and that is sellers in the 2026 market taking the drug hopium. Hopium is hoping that things will change, burying their heads in the sand and just wishing that things will get better. Hope is not a strategy. Hope is not a strategy to get your home sold if you're someone that needs to transact your home in 2026. You know that buyers buyers are smart. You know that they have access to so much more information than they did 5 years ago, 10 years ago. They've got access to everything. They can see the sold prices of the homes down the road. They can compare the square footage. They can see the old photos. They can see the finishings. Buyers are not stupid in 2026, and they are looking for value when they're buying a home. Whatever praying or wishing or sending good vibes to whoever you choose to send them to is your strategy for getting your home sold in 2026, it is simply not going to work. And that's where I'm going to suggest to you that you consider the goal of what you're trying to do rather than just the numbers. So, what do I mean by that? Well, as I said earlier in one of the previous numbers, if the prices of what you'd like to buy have come down and your property has come down and you can still make that goal work, money is great. It's up there with oxygen, but just because your home has come down in value doesn't mean you can't necessarily accomplish the goal that you are seeking out to accomplish. Let's say you're looking to get more space for your family as an example. You have a house that you're looking to trade for another house. And the question is can you make that delta meet? Can you make what has to happen to get you into that home that offers you more space, regardless of what you sell for and regardless of what you buy for, because both are going to be affected by the market. Consider the goal, not the price, and that'll help you be successful in 2026. Hey, look, there is an accompanying video to this video, and it is a very similar kind of theme and flavor to what I did for home sellers here, but it's actually for anybody that's considering buying a home in the next 12 months. So I'm going to leave a link to that below in the description. In fact, I'm actually going to set it up so it comes up right after this video. If you're someone that hasn't subscribed to this channel, we talk everything about going on with real estate in the British Columbia market, and specifically in the areas of Surrey, South Surrey, and White Rock. So make sure you hit that subscribe button. One of the compelling reasons that you're going to want to do that as well is we will soon be releasing our 2026 prediction video on what we think will happen in the 2026 real estate market in the Lower Mainland of BC. This is a highly researched video. We speak with economists, finance experts, and my own opinion as an 18-year top-selling veteran in the real estate industry in the Lower Mainland. So if you're interested in all of that, either hang around for the buyer's version of this video coming up next or subscribe, and we'll see you on the 2026 prediction video coming out soon. Hey, look, I hope this was helpful for some of you watching this today, and I hope it gets you to where you want to go in the future. Thanks for watching.